I want to bring in the merger arbitrage strategist, Sachin Shah, joining me now on the phone. And Sachin, what do you make of this bid?
Hi, good morning, Betty. Happy Friday. So I actually like the offer that Liberty Media has made. John Malone, Liberty Media, basically puts the company in play. The market has not valued properly, I believe, the intrinsic value in the future growth prospect as far as generating cash flow for shareholders. And so we'll find out what Ron Burkle has to say about this offer, and that may be the key to unlocking even more value for shareholders. They've been waiting for so long for this kind of event to occur.
So, Sachin, it sounds like you're saying $17 is not fair.
Yes, it's not fair, Betty. Let me just give you some numbers here. So the valuation using fiscal, this is consensus, by the way, fiscal 2012 is just under 5 times. So the 9 months reported, they generated free cash flow, and so they are profitable. Just to give you an example, when they reported their results back in February, the stock, before they reported the results and before they suspended their dividend, the stock was trading at $18.61, Betty. Okay, so previously Ron Burkle wanted to acquire the company. It was speculated that he may make an offer anywhere in the low 20s, if not up to $25. And he was not allowed to do that. Leonard Riggio prevented the removal of the poison pill. Shareholders obviously voted for that. And so the fact that Leonard Riggio is participating in this, taking the company private with Malone, demonstrates that, you know, the value that he sees potentially merging or having some kind of partnership with Sirius XM, as well as the fact that he sees the potential that the shareholders paid for. So another number that I think is important, Betty, is that shareholders, Barnes & Noble shareholders paid approximately $400 million, a little over $100 million to $150 million in CapEx, as well as $200+ million for the acquisition of Barnes & Noble's college bookstore.
Okay.
So they haven't generated a return. The opportunity for the company to generate free cash flow is still there, and they could get back to where they were a few years back.
All right. Sachin, thank you. Some good arguments there for why the price at 17 might be too low and could go higher. Sachin Shah from Capstone.